Hi, this is Stephen with Snap Projections here to provide a video on our new stress testing feature. If you click on a client plan to go into the main planning page, I'm just going to do an example for John Snapper, a generic client, turning age 59 this year, set to retire at age 65. They've got a few more years of employment income. We can also see they're making some contributions to their investment accounts. If we scroll all the way to the bottom of the plan, we can see that they make it to age 100, $54,000 a year of spending, and they've got about 100,000 left in the RSP, 200,000 left in the tax-free savings account. If we look at the rate column for each of these accounts, we can see that there's a standard static annual rate applied to the principal balance each year of the plan. And this rate is simply coming from scenario setup general. So we have these default settings for inflation, cash, fixed income, and equity. And then we can customize those on the assets page for each of the individual accounts. We have rates of return, asset allocation, and that ultimately gets us to the total return applied each year of the plan. And a static annual rate of return is very helpful for projections in terms of tax planning. We wouldn't want variability to throw off things like their OAS clawback and things like that. But from a stress testing standpoint, sometimes we may want to do a plan that has variable returns instead of a static rate each year of the plan. And we can do that in Snap in one of two ways. And I'm going to show those options today. The first step that I want to do is click on Copy Scenario. That's going to create a duplicate of our base scenario, and I'm going to change the name to Sample Scenario Stress Test. And in the top right beside the dropdown, or in the dropdown beside Run Scenario, we can click on that and either run historical or run randomized. So this is a stress testing add-on that is available in Snap to apply variable rates of return, which will allow you to project a plan from a larger range of sequences. So what if things don't go as well as expected? You can also show market volatility, sequence of return risk. You can model how to manage through down markets through things like a cash wedge or other strategies. So it can be quite versatile in having conversations with your clients and having a bit more confidence in the recommendations you're providing. So if I click on Run Randomized Scenario, we'll see there's a pop-up explaining the add-on. So there's a bit of detail about the two options. There's an article with lots of illustrations, use cases, assumptions, calculations, all documented there for your review. And then it also mentions that you have access to both randomized and historicals, all within the same add-on. So there is a bit of detail to go over in terms of pricing and the logistical activating, deactivating, things like that. I will review those at the end of the plan. I just want to see what the functionality is so that you can get a sense of whether it's something you'd be interested in. So we'll click Activate and Update Billing. When we click on the drop down and click Run Randomized Scenario, we're going to get a pop-up modal that's going to show us the projected value of $1,000 invested across different categories. So there's inflation, cash, fixed income, and equity, and how that grows within this randomly generated sequence. So when we initially load this modal, the software has created 101 random sequences, and it's ordered them from the worst case scenario all the way to the best case scenario. And it starts us off in the middle at the average case. So if we look at the real rate of return of 1.27%, that's about a median case given our input assumptions for averages and a portfolio asset allocation of 10, 40, 50. So I'm just going to update this to reflect the client's approximate asset allocation. So I'll do 20% fixed income, 80% equities, and then I'm going to click update so that the rates are being calculated based off of that asset mix. Now, this mix does not impact the client's plan at all. We will still use the same individual account asset mixes that you've previously defined. This is just to get you a general sense of ranking the various scenarios that have been generated for you. So in the middle, we have these projections for each of the different categories. We can click Show Fine Print in the top, and this is going to show us the actual average rate of inflation that's modeled in this particular sequence. We can see the cash, fixed income, and equity rates. If we were to change to a different random sequence and update, we can see that the individual components are each slightly different. So this is all a bunch of randomly generated outcomes. Now that is based off of our expected rate. So the average rate of return is pre-populated with your settings from the general page, and the standard deviations are populated based off of historical data back to 1990, in addition to the correlation matrix that is used to help generate the relationship between the different categories. You do have the option to customize these rates from this page, so you can adjust the expected average rate or the standard deviation in order to create custom projections. It's certainly not a requirement, but it is available if you're interested. I'm going to close the fine print and go back to the average case. I'm going to update so that the chart is displaying those sequences, and then I'm going to click apply and run. And it's just going to take a moment for the software to apply each of those rates of return for the various years of the projection. You can see that because I have different asset allocations across these accounts, that the rates are slightly different for each of them. So in this case, I have 2080. In this case, I have 0 100. So it is still keeping your original asset mixes and applying that throughout the plan. So these randomized sequences give us the ability to, scroll to the bottom of the plan, and we can see in this case, if they were to get fairly poor market performance right before they retire, even though later on we can see market comes back and there's really strong years in the future, if they're not able to take part in those because they've run out of money, then their experienced rate of return might be different than the overall period average. So we can run all sorts of random sequences. There's a bunch of use cases. We'll cover more of that in the upcoming webinar, and it's available in our article about the randomized scenario feature. So I'll also go back in, and I'm just going to turn off these settings to show you the historical feature as well. So I can click clear and run, and that's going to revert the plan back to my original flat annual rates. This time I'll click on the drop down and go into historical scenario. So this is a feature that we've had for about a year and a half, and we've made some recent improvements based off of feedback from clients. One of those is to allow the customization of the asset mix. Previously, these were hard coded, and now just like with the randomized scenario, you can customize it to more appropriately reflect what your client is invested in. Again, these rates do not apply to the plan once you click apply and run. The individual components would be applied based off of your preferred asset allocation for each account. The other aspect that we've done is we've included inflation in the historical scenario. So in order to create a full context of the historical market returns, we have both the investment returns and the inflation in order to come to a more appropriate real rate of return that's a bit easier to compare across time. So you can either pick a specific period. So maybe I want to model from 2000 through to 2020. I can pick that period, see that there was a real rate of return of about 3.86% for this portfolio mix. I'll click apply and run. And once again, I can see those variable rates of return applied to the projection. If I scroll down towards the bottom of the plan, in this case, we can actually see that the client would have made it if they lived through that historical period. So the stress testing and historical gives you flexibility in terms of the types of plans that you create, the conversations that you're having with your clients. Um, there is an added cost to the add-on feature. It's $9 per month or $97 per year, and you are billed for that on a prorated basis. So if you're only using it for a specific period, if you cancel it before your next billing cycle, we'll reimburse the difference of the time remaining towards your next payment. And you can activate that and deactivate that by going into billing settings and just deactivating and activating here. We do have an upcoming webinar to go more in depth than we were able to cover today. So if you click on help in the top right and then click help center, you can go to the webinars block, click on stress testing and variable rates feature, and then sign up for the webinar. That's on June 8th at 1 p.m. Eastern time. If you can't join us live, that's no problem. We will send a recording of the webinar to everyone who registers. And as of the next day on June 9th, you can also come to this article and view the recording here. We really appreciate the interest in the feature. If you have any questions, please send us an email at support@snapprojections.com. give us a call at 1-888-758-7977 extension 2, or join us live for the webinar. Thanks and have a great day.